Good morning, folks. This is the SPY report, and we're taking a look at SPY, IWM, and the Qs. I do want to remind you that if you're looking for the exact trading levels, you want to get those from the blog. But here we have a look at SPY, and interestingly, yesterday I felt like the gap should fade. And it attempted to, but held pretty nicely above the monthly pivot. The daily pivot also sitting right on top of the monthly pivot, as well as support level 1 of the weekly pivot. So a lot of support came in here. Popped us right off the 30. Now we're holding above the 50. Folks, overall, I am fairly bullish on the market. But that is more of an intermediate term as opposed to the very short term. Now, here's the thing. If we hold up over this level, this 166.33, we will have upside momentum because there's literally nothing in the way of this chart to move up. Here's the monthly VWAP. And that's up there also causing suction. 200 is sitting up here as well. So the chart is looking like there's room. However, the pre-market is a little bit down. If the employment numbers are down, meaning claims are up, then we may see a rejection of the region and a pullback. Overall, though, this little move right here is a little bit bullish. If you can see this formation here of the higher lows and relative higher highs to this small portion, we're in good shape. Now, as far as this wave goes, we're still making lower highs. So we'll just have to see. This is going to be that line in the sand. If we can get up over 66.31. If we can't, we know that there's more downside. If we can, we know that there's more upside. The SMIs are suggesting upside momentum until this rolls. And when this one rolls over, we'll have ourselves a chance back to the downside. I believe that August is going to be unresolved, so I'm really not looking for any kind of exciting price action here. And if there is price action, I expect it to reverse. Okay, so for the IWM, looking at the same sort of thing. There's the double top event here. This one's into the gap, well above the 50, into the 200. This is looking very bullish. And if the TF is telegraphing the ES move, we will have more bullish upside in the charts for us today. This may be a stumbling block, this 103.34, and we are sitting above the 50. We should get at least to the 50% mark between the 50 and the 200 as moving up. These look much more bullish than the SPY, and the only thing that's going to change that overall bullish feel is if we lose the weekly pivot here and fail underneath this 50. As long as the 50 is propping us up here, we have bullish momentum. For the Qs, also looks a bit like the IWM. Now, my thought is that the Qs are grinding northward, right? Every time I put a trigger to go long, it pops into that trigger and pulls right back. Now we're sitting up here, still making higher lows in the region. This one is not a higher high, but the breach out over the 1622 puts us firmly in the gap. And there's the gap fill event. We are sitting up above the 200 and the 50. Here's the thing, we've got a negative crossover right there, but that should inflect quickly. If we've got a moving average formation that's all bunched together right there in a big pinch, that's going to give us a platform to move from. And I've been saying that for a while. I think the Qs have got themselves a bit of a move coming, and it looks like it's into the gap, but it's taken since August the 19th. Today's the 23rd, and we're still just barely into the gap. So sellers are clearly sitting in these regions, defending the area to move north. If we can get them out of the way, it'll be a nice clean move all the way up there. The problem is, can we get them out of the way? All right, so today everything looks pretty bullish. What's going to change that? The slip down here, the loss of the monthly resistance level 1, and then here the loss of all of these moving averages. All right, use caution and good luck trading today.